The content in this podcast was relevant when published on January 20th, 2025. Current views may differ. The financial world has been buzzing with a familiar narrative. The IPO market is dead and companies are shutting the door on public listings. It's a catchy story, but is it true? Today, we're diving deep to separate fact from fiction and covering what's really happening in equity capital markets and busting three of the biggest myths driving the equity capital markets headlines. I'm Phillipa Leighton-Jones, Senior Vice President of Custom Content from The Wall Street Journal. And you're listening to Crafting Capital, the evolving world of private markets, a podcast made in partnership with UBS. Joining me on our first episode to offer a fresh perspective on IPOs and the future of public listings are Tommy Rueger and Gareth McCartney, Global Co-Heads of Equity Capital Markets at UBS, and Maisa Badawy, Partner and Global Head of Capital Markets at Capital Group. Maisa, Tommy, Gareth, thank you all so much for joining me.
Super to be here.
Thank
you for having us.
Pleasure.
So let's begin by taking on one of the big headlines we've seen popping up. Many believe the IPO market is stagnant and essentially closed for business. But is this really the case, or are we missing something? Now, you guys have a front row seat here, and I want to talk to you first, Gareth. You recently said that the long wait is over for the reopening of the IPO market. What are you seeing in the pipeline volume? And interestingly, are you noting any differences between what's happening in the US, which feels pretty optimistic right now, and elsewhere?
Yeah, look, the IPO market historically has always been cyclical, and therefore it's natural when we have quieter times for people to consistently predict the end of the market, and there's a lot of questions that get raised. From my side, 2024 has definitively been the reopening of the IPO market globally. And I think the key question now is, when do we see genuinely historical normalized levels of volume? And our expectation would be that 2025, now we've had the change in interest rates, now we've had the US election out of the way, would be that normalized period for issuance, which if you look historically would be roughly 25% pickup from here again in volumes next year.
Okay, and what about that notion that the US is maybe a little bit more open for business and there is a degree of uncertainty elsewhere, most specifically EMEA, I would say?
IPO market is genuinely very growth orientated, and I think the US does growth better than anyone in the world. Interestingly, though, I think this time round, the market really has reopened in Europe. So the first half of 2024, there was some significant landmark European transactions, which I would argue have reopened the global IPO market. And I think what we see in the pipeline is the US will lead, Europe will quickly follow. And I think what I'm also excited about is a broadening out in Asia, with potentially China beginning to get more active again as well, to complement what we've seen in India and Japan this year.
So, Tommy, given this renewed activity, are there particular sectors driving this resurgence?
Historically speaking, a strong IPO market is dominated by many of the growth sectors. So think technology, think consumer, think healthcare. In 2024, while new issuance didn't meet necessarily the expectations that we had at the beginning of the year, I would say what we took away positively was the breadth of industries and sectors that did participate. You saw transactions out of the FIG sector, out of industrials, out of technology, out of healthcare. So we were really pleased to see not only all of those sectors participate, but importantly, see strong investor participation and interest coming from each one of those transactions, which led by and large to strong pricing outcomes and importantly, strong secondary aftermarket performance, which all collectively sets the table for what we think will be a very strong 2025.
Maisa, let me bring you in on this. How would you respond to what Tommy and Gareth have just outlined there? And what does it look like from your slightly different perspective? You have a slightly different angle on this, right?
Absolutely. But not that different in that if we look at the data, 2009 through 2019, there was roughly $120 billion of issuance ex-China a year. This year, as of this week, we are through $100 billion. So for anyone saying, wow, when is the IPO market going to reopen? Here we are just 15, 16% below long-term averages. It feels like we're quite open already. And I feel that with the re-engagement from investors within our firm.
So Gareth, what you've just said there about what regions are likely to be active, where will we see these companies list?
It's a great question. We historically never really had a debate on listing location with our issuers. Naturally, it was where the revenue was being driven by, where the CEO was based, where the headquarters of the business were based. We've never had more conversations than we've had over the last 12 months about, is the US the place to list, almost irrespective of your underlying operations and the other normal checks that we would go through. Part of that's driven by, I think, a feeling that you get a better valuation in the US, there's more liquidity in this market, and that's quite an attractive proposition. Our view would be you need to look at it from a first principles perspective, take every company on a case-by-case basis, and then make the right decision for the long-term merits of that company. An IPO is a strategic decision. It's not a transaction. It's a strategic decision about what are you really looking to achieve with the listing. I'd love to hear Maisa's thoughts on this.
Yes, it's really challenging nowadays for these companies who we've met off and on over the last few years as they're heading closer and closer to IPO as we do. And a lot of that engagement, say if it's a company based in Europe, is from our analysts based in London or Geneva. And now the companies have engaged bankers in the US for a US listing, and they are preparing more acutely for an IPO a few quarters away, and they want to meet everyone in America, when in fact, I find that their story is better known from their local constituents. It's the local constituents that'll understand how last mile delivery works in Madrid or Barcelona. It's not going to be an asset manager based in Wisconsin. So that is something that I don't envy, this challenge that you guys have in convincing these local issuers to stay, in fact, locally.
Well, Tommy, let me turn to you here. Given that home market advantage, is market cap a big driver of listing location decision?
I think market cap is relevant in the context of valuation, right? As the company and its board thinks about strategically, how do they optimize a transaction like an IPO upfront, of which valuation is one element to it. But importantly, it's the ongoing valuation and value creating opportunity that I think is equally as important, right? One of the reasons we all talked about to go public is for branding. When it's in a foreign market, may not get the same value that you would otherwise get. It's to have a currency to ultimately use either for attracting and retaining employees or, importantly, for inorganic growth opportunities. The value of that currency could differ depending on the listing location and its attractiveness potentially to a target. So all of those considerations need to go into it. Taking a step back, as we think about the outlook for the IPO market, and we look historically over time, much of the volume in terms of just deal activity has been from mid-cap companies. Mid-cap as defined by market caps between $1 billion and call it $15 billion. And so while what we've seen over 2024 has been much more skewed towards the high end and even above that, and we may see more larger companies come public earlier in 2025. As the IPO market continues to gain steam, I think you will see some of those mid-cap names ultimately decide to come to market who have been on the sidelines as they continue to grow and mature their business models. And valuations, candidly, start to catch up to where they potentially raise capital privately. That, I think, as we all sit around the table and assess the health of the IPO market globally, when we start to see more of that activity, we can all say that the IPO market is clearly in a very healthy spot.
Well, Gareth, I'd love to hear your take on that.
I think it's often underestimated the scarcity value that a local champion has, particularly when it comes to an IPO. So if you can bring a fantastic growth company that's a market leader and bring it in its home market, you get a lot of attention, you get the real buy-in of the local investor base. And we've seen in a number of cases, actually that has driven over time valuation premium, extremely high quality shareholding, because you really get then the best of breed of international investor interest, but you've got that core local support that generally we find is very sticky through the long term.
So let's talk about another common belief, which is that an IPO is the only way for private companies to raise significant capital. Tommy, I want to talk to you first. Is it fair to say that the IPO is still the first choice? And are there other options gaining traction?
I wouldn't say it's the first choice, and it's definitely not the only choice. What has been remarkable over the past decade has been the evolution of the private market, the depth of capital, the participation globally. There's a lot of reasons why a company would ultimately choose to go public. The need for capital, the desire for a currency, the need for liquidity from either employees or shareholders. Over the past 10 years, the private markets and how they've evolved have actually been able to provide all of those options for companies across sectors. And so it's allowed companies to stay private longer, to mature their business models, and ultimately, I think, be more attractive to public market investors if and when the IPO ultimately comes to fruition.
Okay, so Maisa, just turning to you on this, how have you seen this trend evolve in the marketplace? Can you share some themes with us?
Well, it's quite interesting. This theme of companies staying private for longer, it hasn't been just a straight line going, from a point in time up 30 degrees year over year. It's more of a wavy line that undulates with the availability of capital, really risk-free rates and financial conditions. And yes, I will say it has risen probably to a 15-degree angle over the years. And a lot of that is the availability of capital. And a lot of that has been a result of regulation. At first, we saw, post the dot-com bust, a pickup, and then a bit of a reversion to the mean. And then really come the global financial crisis, the implementation of the Volcker Rule as part of Dodd-Frank, that started to restrict the availability of underwriters, the availability of public capital, and we really saw companies start to seek other options versus coming public from then forward.
And Gareth, do you share this perspective, and how does that look like outside the US as well?
Absolutely share the perspective. Again, I would go back to the IPO is very much the highlights package of investment banking and investors, what gets all of the attention. But if you go back to first principles, look, we're really here as a group collectively to provide access to capital for companies. What's exciting today, and this is a global trend, as Maisa alluded to, is that the investor base is more flexible in terms of how they provide that capital. They're, in many cases, agnostic between a public listing and a private solution. And I would also play into this debate as well, which is why we're also quite encouraged as we go into next year for the IPO market, that the secondary market, so for big block trades, which also provide monetization options for existing shareholders, volumes have been very elevated across the board, and particularly unusually this year in Europe, we've seen many multi-billion-dollar transactions of secondary shock being sold through blocks as well. So you bring all that together, we're able to go to our issuers and provide them almost a menu of options to accessing that capital. And some of our biggest investors are in a position to look across the capital structure, whether that's through private or public capital.
Okay, so Maisa, back to you. How do you see this trend of staying private for longer affecting companies' long-term growth?
I personally do not see it extending or accelerating from here. So there is about $4.2 trillion of U.S. venture capital stored value, and about $2.3 trillion of that is in unicorns. Of those unicorns, 40% of them have been held for over 9 years. The average fund life of a venture capital fund is 10 years. So we're really bumping up against that. And again, you could say this is, wow, what a wonderful option for companies, all this flexibility. But these numbers have been expanding against a backdrop of, more acutely the last couple of years, a record number of continuation funds being opened, a record number of venture secondary sales taking place, which to me tells you that there's some discomfort with how much this trend has expanded. So I, in fact, think there might be some reversion to the mean with this trend.
And Tommy, we're recording this podcast at the end of 2024. With all these changes in the ECM landscape, where does this leave issuers today, and what are the biggest opportunities and risks you see as we're heading into this new year?
What I can say is the level of interest in companies exploring the opportunity to go public in the next 12 to 24 months is as high as I've seen since 2021. There's a host of factors that are driving that. But the reality is, as you've heard from everybody here around the table, we think the table is set for an uptick in activity and for the demand from institutional investors retail investors for these new companies to go public. And so the risk is a couple of fold. One, for one reason or the other, the macro environment starts to soften in a way that the attractiveness of going public is lost, whether it's temporary or for an extended period of time. That could be geopolitical, that could be fiscal, that could be a whole host of different elements. The second is that there ends up being a fair amount of supply coming to the market at the same time or around the same time, where the differentiation of businesses and or the outcomes of these transactions may be less than expected. Our sense is there's plenty of depth of capital and mind share for what we expect to come over the next 12 to 24 months. What will be critically important, though, is as that supply comes to market, that it provides all investors, existing and new minority investors and shareholders, the opportunity to make money and see value appreciation. And so that's going to be incumbent upon all of us collectively, constituents, to deliver good product in a way where everybody wins.
Yeah. Well, Gareth, Tommy's just outlined some trends there for 2025. What do you think are going to be the big headlines in ECM, and how do you think investors should be thinking about issuance as we head into the new year? And based on what Tommy said there about, you've got to bring quality companies to market in the right way.
Yeah, I'll pick up on the quality point to start with. Generally, with the IPO market reopens on high quality, larger, liquid situations. That's exactly what you've seen with the companies that have come public in 24. What's uncomfortable for us all is usually at the start of the IPO cycle, you are in a uptrending equity market. We are all-time highs in equity markets currently. We've had volatility at pretty much all-time lows for the majority of the last 24 months. So the uncomfortable point from an issuer perspective is we've had perfect conditions on paper for 2 years now, but we haven't seen the supply come. And now we're gearing up for an IPO cycle to pick up exactly at the time when markets are already at highs. Now, there's a lot to be encouraged about from the macro that will continue to have a benign environment, but I fully echo Tommy's point. That's the biggest challenge, that we suddenly hit a volatility pocket exactly when we're ready to issue stock. And I think that's a global phenomenon. What's also positive, though, is the depth of capital that's around, and the fact that actually the known event risk is much lower this year. Last year, we knew we were going to have to battle with peak interest rates. We knew we were going to have a big election cycle globally coming up. So the nice thing about 25 is the event risk is much lower. We've seen peak rates. We've seen the elections happen. So I think we're into a more benign environment.
Maisa, same question to you.
I'd love to comment on the valuation part. That depth, and it speaks to the depth of capital that is engaging with the new issuance calendar today and hopefully in 2025. That is a big factor for investors. These wonderful banking counterparts are selecting high-quality companies, and they're having them come public at reasonable valuations, something that was broadly missing in 2021. And we were all a part of that process. But you look at that cohort from 2021, that pricing paradigm, even though the stock market might be at highs here in America, that cohort of IPOs still are down 25, 30, 35%, whereas the cohort from this year is faring much better. And a lot of that is because there is $1 of value left in the price for investors. And I find investors are more inclined to engage when they feel valuation is balanced. The conversation is considerate of where publicly traded comps are trading, something that we lost sight of, or all had lost sight of, in 2021.
So do you think we'll be seeing the same in 2025 and beyond? Will we see that same undulation that you mentioned earlier?
I believe so. It's one of the factors that Tommy had touched upon, where sometimes there are windows where supply is just too much, and the cyclicality of deal flow, where maybe we might start a cycle with top quality, and then as we head towards Easter or what have you, it might be the lower quality companies coming through. So that undulation, even throughout the year, is something that the experts in this room will manage perfectly, I'm sure. But it is something that we all keep an eye on, because supply-demand is at the core. What the new issuance calendar is focused on.
I fully agree with that. We've had a supply problem for the last 24 months. We've had lots of interest, but we haven't had the supply come. If you pull some of the trends of this discussion together, there's no doubt there are mature assets in private equity hands today that are large and would be extremely well received by public investors, albeit at valuations that are attractive. So we believe there'll be a lot of supply from private equity. Secondly, if you look at corporates and particularly the continued engagement from activist investors on bigger companies, you are seeing CEOs using IPOs or spin-offs as a tool to create shareholder value and to deliver growth in a more difficult economic environment. Again, globally, we very much see that trend continuing. And thirdly, just with some of the mega trends like AI, there are some incredible private entrepreneurial companies which, again, will need public capital. So when you bring all of that together, that's been the piece that's missed really for the last 24 months, which was supply. I think all of those three buckets are going to be very interesting providers of companies to this pickup that we see either through more private transactions or more likely using the public markets.
Okay, well, that sounds like an incredibly positive picture. It sounds like there is a burgeoning pipeline out there. And I feel like we've really busted some myths there. Looking forward to seeing what happens to the equity capital markets in 2025 and beyond. Thank you so much for being here today.
Thank you. This has been fun.
Thanks for your time. Thank you.
What you've just heard is that the IPO market is far from dead, but it's also far from the only way to scale and grow. You've been listening to Crafting Capital, a podcast series in partnership with custom content from WSJ and UBS. I've been your host, Phillipa Leighton-Jones. Join us for upcoming podcasts in our series at partners.wsj.com/UBS and on Spotify and Apple Music.